Welcome to the Cardinal Commentary for the Canadian Equity Portfolios. The first quarter of 2026 was shaped by a major geopolitical event, the outbreak of the Iran war, which unsettled global markets. Despite the uncertainty, Canadian stocks held up well. The S&P/TSX gained 3.9%, while the S&P 500 declined 4.3%. For investors wondering how to interpret an active conflict, Chief Investment Officer Evan Manser shares his perspective.
It's always tough to say because war is unknowable in the outcome. I do think both sides do want this to end. Our advice on war is the same as it's always been, that you're better off to stay invested. Most wars in the past, markets do just fine.
At Cardinal, we see the AI investment cycle as a key driver for Canadian equities, not just for technology companies, but for the broader economy.
We're starting to see a broadening of the market now, where a lot of the gains are going to come to where all this money is being spent. And a lot of that's to support data centers. And a lot of our Canadian companies actually do have exposure to that, whether it's utilities, pipelines, all the companies that are supporting industries to that huge amount of dollars that's way out the door.
This quarter, we're highlighting RBC as a portfolio holding that exemplifies our focus on scale, quality, and long-term competitive advantage.
RBC's scale advantage often goes underappreciated. When you think about investments that need to be made at a bank, the fixed dollar value doesn't change just because of size, whether it's the cost to build a branch or the investments in digital infrastructure. From RBC's perspective, given their larger size, larger customer base, these investments are spread over more people and therefore they're able to operate more efficiently.
Together, these are the kinds of businesses that form the backbone of our Canadian equity portfolios. Quality companies built to perform in all market environments. And here's the proof. If you had invested $500,000 in the Canadian equity portfolios in 1993, it would be worth more than $14.6 million today, compared with just over $9.2 million for the S&P/TSX. And why do we do all this? Because it works. And that's the Cardinal Commentary for the Canadian Equity Portfolios. Thanks for joining us.